We have the management of Cera Sanitaryware joining us, Mr. Atul Sanghvi, the ED of the company, to talk about how they have sustained a strong top-line growth. However, margin has shown a bit of a compression as far as their trajectory goes. So let's talk about your top-line growth to start with in the quarter gone by. Double-digit growth has been delivered once again. So firstly, tell us what has aided that and also what the volume growth has been.
Yeah, our growth in the fourth quarter was 16% and it was 16.8% for the entire financial year. If you see, we have three verticals: sanitaryware, faucets and tiles. The growth in the sanitaryware category was 9%. It was 23% in the case of faucets and about 40% in case of tiles. Because our base in tiles was very low, so that's why our growth in terms of percentage, the growth percentage is very high in tiles, and it is mainly because of the faucets and tiles we have been able to maintain this growth.
Could you tell us,
as far as the volume growth is concerned, since our focus is on value and we are focusing on premiumization, so focusing on volume, it does not hold good.
And could you tell us if you witnessed any market share gains post GST, given that there's been a huge shift which is expected from the unorganized space in favor of the organized sector? We understand that the unorganized space is actually adapting themselves to the new regime and becoming more compliant. So given that transition that one has been witnessing, if you could tell us if there's been any expansion in the market share that you have?
See, what change I can say is what we have witnessed is the unorganized guys, they have tried to become organized, at least to say to the scale of 50%. And as far as the benefit to us is concerned, I think it will take some more time for us to analyze and see whether it has translated fully or not.
Hi, this is Nantara joining in from the New Delhi studio. Now, going forward, what's done is done. Going forward, what's going to be something your shareholders, the analyst community will want to know about is the input prices and the pressure it's going to have on your margins. We've anyway seen the margins dip on the back of higher raw material prices. That's a trend that's going to continue, right? So what is it that you can tell us, how you're going to counter it? What's the guidance that you can provide us on margins?
Well, one thing, I agree that our margins have gone down in the last year, but having said that, I'd like to mention that in our category, GST was reduced from 28% to 18%, and immediately we had passed on this benefit to the customer. Okay, but at the same time, the input costs kept on going, which we did not pass it on to the customer. Otherwise, it would not have looked very fair to the customer. We wanted to be fair to the customer. That is why we ensured that whatever is the cost increase, it should be borne by us. Normally, every year we are able to take price increase once or twice, which was not the case in the last year. We have taken a price increase only now. So I think whatever was the loss, we'll be able to compensate in this financial year, and our margin should improve in this year.
Thanks much then for joining us with the highlights of the quarter gone by and what could be the way forward, especially for the margins trajectory.